Well, hello everyone, I'm Dr. Stock, and this video is for entertainment purposes only. Today, I would like to talk to you about some of the best growth stocks that you can buy in the stock market right now, including the fact that the stock market is up pretty high and that it could tumble from where it's at. These are still companies that have great value in them that have not seen those peaks or are not at those peaks that other stocks are. So these are ones where there's still significant amount of value in those growth companies, and I think that you're really going to enjoy them. So stick around and let's get ready to rock. Welcome back. So these companies that we're going to check out today, I think that there's significant value that can really help line out our accounts and really help out our portfolios to really fill out those good, solid investments with excellent companies at reasonable prices. So all three of these are high conviction plays. I have positions in every one of them. And if you wanted to see what's in my portfolios, you could check it out at the Patreon. That link is down in the description. And that's it for that for right now. So let's move on to those stocks so you can see which ones I have for you. I think that you'll like what I have. All right, so let's make that bigger. The first one that I have for you is Digital Turbine. So when we look at Digital Turbine, the average analyst estimate on this, according to TipRanks, is $107. So 100% upside, actually over that 109% upside that we have right now, currently trading, closing today above $50. So I thought that this was a great buy under 60. And well, this is definitely under 60. It was actually down in the 40s. I was able to dollar cost average down into those values a little bit, and I might actually take another position given the price action that it's out now. This is a company that puts in triple digit growth and is still expected to put in triple digit growth over the next year. So I really think that they are experiencing rapid growth and they're just experiencing a time of drama right now. And I just think that it's something that we're going to get through and we're going to get over. I think the time is right in order to take a position in this. Remember, this is for entertainment purposes only. So when I speak about this, I'm not telling you to go buy this, but I am telling you to check it out, see what you think about it, and find your own research and due diligence. Maybe you'll take a position too. Who knows? We'll see. Either way, let me know. Reach out to me in the comments or join me over at the Patreon. Talk to me in the Discord and let me know if it's something that ended up working out for you or what decision you made. Let's move on from there over to there we go. We'll go to the charts that we have on Digital Turbine. So when we look at this, this is a stock that already has traded up over $100 per share while tech and high growth was at its peak. And you can see it resisted some of the sell-off because it's a company that is very strong fundamentally and will continue to be strong fundamentally. So they are in the mobile advertising space and they help people to get a hold of other companies' apps and to really monetize them. And they've done incredibly well with it. And recently, Google made a change to the way that that developers upload things to the App Store, that they have to be a certain file type. And I think that, this price action that we're seeing is a result of people thinking that Digital Turbine was blindsided by this and that they were going to suffer from it. Digital Turbine came out and said that they already knew about this. This is years old. They already adjusted for it in 2019, and it has no impact whatsoever on their business model. That they've already taken care of the change because Google gave lots of years of notice for the change. They made it available in 2018, and then by 2019, Digital Turbine was ready to go and has it fully implemented. And now Google came out in August. I was around August the 10th and said, hey, everything has to be an AAB file type that gets uploaded to the Google Play Store. And so that is some of the FUD that we have surrounding Digital Turbine. That's why you see this recent sell-off that you do. So this is one of those companies, very high conviction play for me. And I think that the time is just right, that we haven't seen prices like this all the way since back in January. And even then, I think that we're still seeing very good prices here. And I believe that we've hit bottom right now and that we're going to see that growth realized over the next 12 months. All right, the next company that I have for you is ChargePoint. So 7 buy ratings, 1 hold rating, currently a 62% upside. This is the leading EV charging in the United States, has 70% of the chargers, and one that should do fairly well being in that leading position. So we go through, we can see there's a $24 from Goldman Sachs 23 days ago, 30 from DA Davidson 27 days ago, Needham putting it as 39 last month, 46 from Roth Capital, 39 from Oppenheimer, and you can see some of the older ones that we have as well, 39, 40, 29. So we are a little bit all over the place with this one, but this is one that I think is less risk So a little bit less reward from it, but I can see them being very strong through 2022 and further on growing along with the EV industry. I think that they're going to do really well. So let's take a look at their recent price action and see the sort of opportunity that we have in front of us. All right, so here's ChargePoint, and you can see they one day back when they were SBE for Switchback Energy before they did the acquisition, they were up here almost at $50 a share, and then they took the tumble with tech and high growth EV sell-off, and you can see this support line that I have drawn in here. They're currently trading under the 200-day moving average and the 50-day moving average that I have drawn on here for us, and we are just above this top area of support line at around $21 per share. And today was a rather strong day, bringing us up to 22. But I think we're going to see that upside into the 30s next year. I think we need a little bit more of this time to pass and this time of economic uncertainty to go through. And I really think that EV is going to fill out over time, and we're going to continue to see that growth. And EV chargers are infrastructure that's necessary that should move right along with it. So ChargePoint, absolutely one of the best stocks to buy now. And I really think that it would make a nice addition to your portfolio. And if it's already in there, it's an excellent time to dollar cost average because it's a company that just isn't going anywhere anytime soon, being one of the market leaders that we have, especially being a publicly traded company like ChargePoint. The last stock that I have for you is NIO, and recently NIO's really sold off. And this one, we get a bigger upside, 72% upside, almost 73% upside from its current price of $38.17. And we can see the $66 price target that it has on it. And they are a leading EV company in China. So being the leaders that they are and the sort of price targets that we have, they're ones that aren't going to go anywhere anytime soon. They're going to continue to produce and innovate, and I think that they'll persevere through the semiconductor shortage. And I think that we're going to see those numbers come out for their production and deliveries to be very strong, and also the demand for their vehicles to be very strong. And I think when they put out the lower cost models under a different name than NIO, I think that we'll also see a lot of success come out for NIO in that as well. So being right now at 38.17, if we take a look at the chart for NIO, there we go. And the Chinese stocks are having a rough time right now. NIO being a Chinese company, we can see some of that and count some of that in for that sort of drop that we see and that stumble. And the low price that we have here is 36.24. And that most recent low that we saw in my live streams, I said that I wouldn't be surprised to see it around 35. I would be surprised to see it in the low 30s. So this is not surprising to me. I think it's just one of those things that we're going to have to persevere and that we're going to have to work through. And I think that we're going to bounce significantly from this. And I don't think it'll be long before we see it in the 40s. I think that we'll see it closer to $50, $60 range by the end of 2021. And then seeing that $66 price target in 12 months, I think we're easily there. End of 2022, we could even see triple digits in its stock price. So those are some things to look out for. And that's what I have for you for those growth companies. So one other thing I wanted to show you for access to those Chinese stocks, this is the user interface for Moomoo, and this is the chart that I have for NIO. So it should look very similar to what we were just looking at. And so there's the sell-off that we have in the lows, but the reason I want to bring up Moomoo is that they have this nice versus feature. So it says this is the stock comparison. So I have NIO in orange, and then XPeng in blue, Tesla in pink, and then Li Auto, which is in blue. And when you look at those that somewhat move together throughout the EV industry, look at NIO going back here to August the 10th. It has significantly trailed the other three. I think that NIO is going to do some catching up, and I think it's going to happen quickly. And the resistance that we have around $42 to $44 a share, I think that we'll break through that as we start to move back up towards these other EV companies that we have, including Tesla. Even if Tesla starts to really gain ground and pull away, NIO should close this gap and move up with the rest of them. So Moomoo, if you want to check it out. Also Webull, that was the other platform that I was showing you. Both of the referral links for those platforms, which are pretty cool to use, are down in the description. You can get 4 free stocks for Moomoo if you sign up there with that referral link. So sign up, do your deposit of $100. You can get up to $3,500 in stocks. I think they're running a promo right now for a free share of GM, which is about a $50 value. So you get lots of free money thrown at you. It helps support me in ways that don't cost anything to you. So you help yourself, you help me, and you can also hit that like button. That also helps. Webull gives out 2 free stocks valued up to, I think, $1,200. I'll have it right down in the description for you. But for that one, again, no cost. You sign up, do your deposit, I get my free shares for the referral. So thank you guys for that. So let me get rid of this so we can come back. So let me summarize. Digital Turbine, I think absolutely that price could double over the next 12 months. ChargePoint, seeing that $36 mark, I think that as time goes on, they're going to even move up from there as the years continue. But one thing at a time right now, making back to the mid 30s, I think is very reasonable from where we're at now, making it one of the best growth stocks that you can buy. And then NEO, I think is just going to be a monster of a company, especially as they move into the European markets, and if they can make it into the United States markets. I think that we're just going to see a lot of this downside, sell side pressure that we have. I think we're going to see it lift off from here, and we're going to start recovering some of that price action, and it's really going to end up being a really huge company over time. So those are the best ones that I have for you. Check out those referral links. Join me at the Patreon if you want to. Check out my portfolios that are over there, my weekly newsletter, and my weekly watch list of stocks. Thank you very much for joining me. I'm Dr. Stock. Thanks for rocking with me. Now go get that money.